All right, today is Sunday, May 16th. This is a recap for the stock market activities on Friday and an outlook for the week to come. Where do we start? Let's start by the con man of the century, the fraud father, who hinted today on Twitter that either he already dumped Bitcoin or he's thinking about dumping Bitcoin, meaning that the whole thing was a publicity stunt, aka a pump and dump. And the tulip chasers got stabbed in the back by Reverend Elon Musk, their Lord and Savior. They're chasing these tulips, playing Pokemon with real money, and putting their entire faith on one man who doesn't have their interest in mind. The con man of the century doesn't care about anything but himself and his ego. I've been saying this to you in this channel over and over and over again, warning that Reverend Elon Musk is a fraud. And if you follow him, you will follow the path of destruction, your destruction. Meanwhile, he will walk away just fine, richer than ever. And those of us who've been warning about this man for too long are now vindicated. But still, there are those out there who will continue to believe in this fraudster, this con man, specifically the Dogecoiners. But even the doggies will get stabbed in the back by Reverend Elon Musk because he doesn't control the damn thing. These are tulips with zero intrinsic value. They only trade based on sentiment and based on one man pumping and dumping. Enough said. Let's go back to the market. I was anticipating an oversold rally on Friday. We got that on Friday, but the rally started a day before, earlier than expected. Thursday, we started to see the rebound higher in certain names, specifically the inflationary names. The mania names did not join the rally. But on Friday, we saw a lot of short covering and lots of oversold rallies. And therefore, during the previous video, I was stressing the difference between legitimate dip buying and oversold dip buying. Oversold rebounds. You gotta be able to differentiate between the two. Is the dip in JP Morgan equivalent to the dip in ARK Invest, for example? One still has the supportive fundamentals, the technicals, and the valuation, and rebounds right away, no problem. The other one has the supportive technicals, meaning the oversold condition for ARK Invest, but does not have the valuation or the fundamentals, the macro environment supporting the sustainability of the oversold bounce. So before you buy the dip, ask yourself a question. Do the technicals support the decision? Do the valuations support buying the dip? Do the fundamentals support buying the dip? It's not a checklist. It doesn't have to be all three of them. You can play and trade oversold bounces. And I will show you lots of oversold charts during the technical analysis. And by the way, you wanted tickers? Here are tickers. I'm giving you almost 50 charts in this video alone. Tell me again, which YouTuber gives you 50 charts in one video? The tsunami of tickers. The question is, are you ready for it or not? We have an important, very important week to come. And it is all dependent on the theme of inflation. We have the FOMC meeting, and we have many other events, the Empire Index, for example, which will be very important in validating whether inflation is here and growing or whether it is transitory. We also saw yields popping higher, then reversing lower. We will discuss that. I will also discuss the correction in commodities, and I will cover a bunch of charts for you. But for now, let's start by covering the market's performance on Friday. And here we go. The Dow Industrial Average closing in the green by 360.68 points, or a gain of 1.6%. The Nasdaq closing in the green and leading the day by 304.99 points. Let's round that up to 305. Or a gain of 2.32%. The S&P 500 also closing in the green by 61.35 points, or a gain of 1.49%. And notice the drop in relative volume. This is what the market likes to continue to rally higher. If the volume creeps back in the market, that will be bad news for the indices. What about the sector's performance on Friday, leading the pack at number 1 and capturing the gold medal? Energy at number 2 for the silver. Technology at number 3 for the bronze. Communication services. Every single sector of the market managed to close in the green. Lots of dip buying, lots of short covering, and very little resistance on Friday. Let's contrast that with the week. We have losses across the board. every single sector closing in the red with exception of energy just slightly in the green. So we're not going to give any metals, but the decliners for the week led by consumer cyclicals, technology, and communication services. What about the market breadth on Friday? The decline to advance ratio. NYSE 85% advancing versus 13% declining. The Nasdaq 83% advancing versus 14% declining. A decisive day in the green. Very little resistance. I did some short covering myself in the morning and I went away. I didn't come back till the closing of the market. Moving on, futures. What's going on here? We saw a rebound in crude oil prices on Friday for both the WTI and Brent, closing in the green by about 2.5% apiece. What about softs? The correction in lumber continues to go on. And let's take a look at the chart of lumber, by the way, because the disinflationary crowd, the inflation deniers, already creamed their pants. After 1 week of declines in lumber, copper, and corn futures, aka the axis of inflation. But remember, in the grand scheme of things, this is coming after a massive rally. These commodities are not just going to go in a straight line to the moon. They require corrections and profit taking. But the supportive fundamentals for the mania in commodities are still there, so long as the Fed continues to let inflation get out of hand. So long as the Federal Reserve continues to say we're not thinking about tapering or raising interest rates, money will have to chase commodities. The demand from China continues to increase by the day for lumber, for copper, for corn. The proliferation of EVs is an important catalyst, an important tailwind for copper. Likewise, we have an increase in demand for grains, but the drought in the US and Brazil is adding pressure on supply. It is pretty much impossible for the supply to meet the demand, at least during the first half of the year. So anyhow, here is the chart of lumber. We have a nice correction here, a drop, a big one of about 20% or so. But again, on the heels of a massive rally. And we have seen these massive corrections before, last year, only for lumber prices to rise and rebound higher again. So long as the Federal Reserve remains in denial, commodity prices will continue to rise higher. We also saw declines for cotton, coffee, cocoa, and sugar futures. The only gainer for softs futures on Friday was OJ. What about metals? What's going on here? Declines for copper, one of the axes of inflation, and here is the chart. Once again, they're creaming their pants. Oh, you see, it is transitory. Inflation is not here. Where is inflation? Look at the chart, you dummies. It's not going to go in a straight line to the moon with no corrections. You see the trend line, and we went there before, by the way, earlier this year. Not last year, not 5 years ago, earlier this year. We had a correction in copper, and copper rebounded higher. And the assumption is, yes, we could see a massive correction in copper, but so long as the monetary policy remains the same, the trajectory for copper is higher. Meanwhile, we saw gains for gold, silver, platinum, and palladium futures. Gold and silver closing with an excellent week, and the reason is we saw weakness in the US dollar and weakness in yields, at least in the last half of the week. What about meats? Declines for lean hogs and live cattle futures. Meanwhile, we have feeder cattle futures closing in the green. By the way, we have earnings for Hormel during this upcoming week. And that will be an important pulse regarding meats inflation from the producer all the way to the end customer. We heard from Tyson complaining about the rise in input prices, and they will in turn raise prices for the end customer. But this model is not sustainable because if inflation continues to go out of hand, at some point their margins will be crushed. So the earnings from Hormel is very important. What about grains? Earlier in the week, we saw a massive correction in grains, down across the board, but the most important name to watch here is corn, because it is part of the axis of inflation. And by the way, part of the rebound in the Nasdaq and the mania names, yes, oversold conditions, but also yields went down. Yields reversed the pop after the CPI inflation data, and that was in part due to the correction in commodities. Corn down big for the week, but again, it went on a straight line, vertical line. Charts don't work this way. Stocks, commodities, cryptos, it doesn't matter. If you go in a vertical line higher, you're going to have a steep, sharp correction. This is a normal part of the process, and again, so long as the monetary policy and the macroeconomics environment is supportive for corn, corn will rebound and continue to rally higher. We saw a big rebound for soybean oil futures and modest gains for soybean and wheat futures. Meanwhile, declines for canola, oats, rough rice, and soybean meal futures. Moving on to the options market, the big casino. How hot were the tables on Friday? We saw massive rebounds, specifically in the mania names, the retail crowd's favorite names, finally buying the dip in Palantir day 200. Finally, it's working. So was that reflected in the options volume on Friday? Not so much, because we saw Apple at number one with a little over 1.2 million contracts. About 61.5% of those were calls. At number two, Tesla, slightly elevated at around 1 million contracts. About 54% of those were calls. Perhaps we reached some oversold conditions in Tesla and we are anticipating a rebound. However, the name is becoming a target right now, not just by institutional investors who are pulling back from Tesla, saying, okay, perhaps the mania is over in this name. At the end of the day, it is an automobile manufacturing company. It shouldn't be valued as a software startup. But here it is. Will the backlash from the crypto maniacs, the Bitcoin fans, who are getting stabbed in the back by Reverend Elon, will they stage a movement against Tesla? Dump Tesla, dump Elon? We will see. At number three, AMC with a little over 850,000 contracts. Massive amount of options traded for this name. Given the fact that it is a small stock of about $13, the name blasted higher, over 30% for the week due to a gamma squeeze, and it is continuing. A little over 850,000 contracts traded for AMC, about 74% of those were calls. Palantir is an important name to talk about because it is severely oversold, and the retail crowd has been holding the bag for a long time now. So perhaps buying some call options here on Palantir, expecting a pop, an oversold conditions pop might ease up some of the losses, perhaps, but you have to remember, Bitcoin is going down over the weekend. Palantir, the geniuses that they are, the Johnny-come-latelys, they announced this week that they will also start adding cryptocurrencies, specifically Bitcoin, to the balance sheet. Be careful here because the tulip mania is dying, and we have Square down big, Tesla down big, MicroStrategy down big. Why would Palantir join the mania right now? Too late. It should have been done way before. What about the unusual activities that took place in the options market on Friday? Let's start by the RKKKGOS. An insane spike in the options volume traded for this name took place this week, bullish and bearish. But for now, we have oversold conditions, and you saw ARK Invest rebounding significantly higher on Friday because there was lots of short covering and an oversold bounce, which could continue for a few more days. Could, but not a guarantee. Therefore, I will show you the difference between the daily chart and the weekly chart for these oversold bounces. In this case, they're playing the bounce by buying the 113 calls, expiration date May 28th. With expectations that the name will rise over 8% by then, they paid about $1.10 a piece to enter this trade. All in all, bringing the total to about $1.5 million. What about the trade for the ticker DKNG for DraftKings? I have attempted to buy the dip in this name and I got two smacks in the face right away. The name was down 6% and another 6% and another 6%. So I should say triple smacks in the face. But the name has reached extreme oversold conditions on the daily charts, and I will show you that during the technical analysis. Perhaps this is the time to buy the dip in DraftKings, at least according to this trade, because they're buying the 48 calls, expiration date May 28th. With expectations that the name will rise over 7% by then, they paid about $1.20 a piece to enter this trade. All in all, bringing the total to about $1 million. What about the trade for the ticker FTNT, one of my favorite names, and I own this stock in my portfolio. Take a look at the chart of FTNT. Do your homework, I'm not going to do it for you, but this chart has been resilient in this NASDAQ correction. You take a look at your average software name or cybersecurity name, down big, ugly charts. But FTNT held steady, and it is one of two names that I own in the technology sector. The reason is the valuation for Fortinet is reasonable, or at least was at the time when I bought the stock. Anyhow, somebody sees more upside for the name and they are buying the 220 calls expiration date June 18th. With expectations that the name will rise over 7% by then, they paid about $3.25 a piece to enter this trade. All in all, bringing the total to about $2.7 million. What about the trade for the ticker SIL, for silver? This is a silver miners ETF. And by the way, both gold and silver, the charts at least, looking extremely bullish. What does that mean? Does that mean that yields are going to go down? That is a plausible explanation. However, we know that inflation will continue to rise higher, driving yields higher. So the question is, will we finally see gold and silver breaking the inverse trend with the 10-year Treasury yield, meaning that gold starts to rise higher along with inflation, as it's supposed to? Remember, I've been saying all along, gold and silver have an inverse relationship with yields, and therefore the validity of gold and silver as hedges against inflation is questionable. But if gold and silver start to break that trend, then we're back in the game, baby. This is at least what this trader is saying by buying the 50 calls expiring July 16th. With expectations that the name will rise over 10% by then, they paid about $1.25 a piece to enter this trade. All in all, bringing the total to about $875,000. What about the trade for the ticker TSLA for Tesla, or shall we say Tesla, or easier, the souffle? They're making a bearish bet here by buying the 560 puts expiration date May 21st, with expectations that the name will drop over 5% by then. They paid about $8.80 a piece to enter this trade. All in all, bringing the total to about $3.5 million. Lastly, pay attention to the trades for Riot and Mara. These are crypto miners, and they are proxies to play the rise in cryptos. If you don't want to buy Bitcoin, you buy Riot, blockchain, or Mara. We have bearish trades for these two. We're seeing cryptos declining over the weekend. These names happen to be oversold severely on the daily charts. We have that conflict between the technicals and the fundamentals. The technicals say we're oversold, perhaps this is an opportunity to buy. The fundamentals say, whoa, wait a minute here. Cryptos are declining over the weekend. Be careful, perhaps we have more pain to come here. And this is exactly what these traders are saying. Moving on to the heat map analysis, and this is for the weekly heat map. Right away, my eyes are drawn to financials, healthcare, energy, and defensives because these sectors were the safest place to park during this week. But there are different themes here mixed all over the place. For example, take a look at the technology sector. The majority of names got whacked due to the correction we saw in the Nasdaq this week, with very few exceptions. We have some rebounds on Friday, and those rebounds were so big in the oversold names. For example, Palantir, the oversold bounce on Friday alone was enough to push the name to close positive for the week. And that is an important take. The name declined significantly and then rebounded higher to close the week in the green. Is the bottom here? That is the $1 million question. We also have Intuit, the ticker INTU. It's tax season. If you haven't filed your taxes, you got till tomorrow. Traders usually buy the name ahead of the filing date, buy the rumor, sell the news. They bought it last week, they dump it this week. What about communication services? Mixed picture across the board, but mostly declines. We saw DoorDash rising higher on the heels of earnings, but this name got whacked severely the last few weeks. Disney down big after earnings, and we talked about these reopening names. They went out of whack. If they report earnings and there's the slightest miss, the slightest disappointment, they will go down big. What about consumer cyclicals? Big down week for Alibaba, and the Chinese names. And also Home Depot, Lowe's, these are down big for the week, and the reason is they became proxy to play lumber. We saw correction in lumber. These names went down. What else is a proxy play for lumber? The residential stocks. D.R. Horton, Lennar, Toll Brothers down over 7% apiece. Massive declines for the week. Likewise, Tesla down big, NIO down big, even GM down big. GM went out of whack and never experienced a correction. Ford, on the other hand, closed the week in the green because Ford already faced the correction right after earnings. The notable outperformer in the consumer cyclical sector is Peloton. Peloton up big, and the reason is lots of short covering after the recall. Consumer defensives, outperformance across the board with exception of certain names, specifically in the remote education stocks. What about materials? Outperformance for gold, but we saw a sell-off in copper and grains, and therefore you're seeing FCX, Freeport McMoran, closing in the downside for the week. Likewise, lots of the farming stocks, whether it is equipment or fertilizers, also down for the week. Industrials, it's a mixed picture, muted all in all. Similar story with energy. Healthcare was the outperformer, the safest spot to park this week. Meanwhile, financials, and this is a lesson by the way, financials should outperform if we have higher inflation and higher yields. And therefore, the dips in these names were bought very quickly, specifically in the regional banks. What about the themes analysis? Starting with the reopening names. Mostly it is a negative picture, and like I said a few weeks ago, these names went out of whack. They need a correction. When they report earnings, the slightest miss will be met with a severe punishment. Case in point, Disney, Coty, Cheesecake Factory, all of these names down big. The exception is AMC. This is a mania name, which happens to be one of the Wall Street Bets favorite names. In case these people are still alive, we know it's hedge funds. There is no such thing as Wall Street Bets, by the way. But again, lots of short covering in this name, pushing it higher and pushing the IWM and the Russell 2000 higher with it. Another name, Live Nation, bouncing higher significantly because the number one obstacle for this name was the mask mandate. The CDC comes out, says, hey, no masks outdoors if you are already vaccinated. Live Nation pops higher. The name already experienced a correction a few weeks ago, and now it is rebounding higher. These names are still in favor. They're going to continue to buy the dips in these names so long as we are anticipating the reopening phase this summer. What about the inflationary names? All in all, healthy correction across the board, and of course we want more. We want more downside for these names to buy the dip, because these names, at least the majority of them, I might be wrong on one or two, but the majority of these names will outperform during higher inflation. The dips were bought quickly in banks and certain names, but we saw a healthy correction, a minor one, in the inflationary trade. And by the way, if you're going to buy the dip, wait a little more, specifically if you're buying stocks tied to commodities. Freeport McMoran, Alcoa with aluminum, steel stocks. Wait till we see a rebound in commodities and then start buying these names. What about the disinflationary stocks? Pain across the board, with exceptions. Those came from DoorDash reporting earnings, Peloton, the short covering goes on, and Zoom for some weird reason popping higher. The name is oversold, been whacked severely. It is time for a rebound. But all in all, the high multiple names within the disinflationary trade are the ones suffering the most. And this week we saw DR Horton joining the pain, for example. Lumber prices corrected, and we had the treasury yields popping higher during the earlier part of the week. At some point, when yields blast significantly higher in a rapid, impulsive move, breaking above 2.5%, you will start to see the housing bubble, the housing mania starting to pop. When that happens, these names will suffer tremendously. The home builders. Moving on to the charts analysis, starting with the tulip market, because this is where the action is. Let's start with the biggest tulip of them all, Bitcoin. And here's the chart as I showed you last time around. No new markings whatsoever. And by the way, I took this screenshot in the morning, so there are lots of developments already. But let's see what's going on here. We're making lower highs and lower lows. The chart is starting to lose momentum and heading ever so closely to the center of gravity, the support level that I have identified for you, 42,000. There is no guarantee here that Bitcoin will rebound from 42,000. It could be lots of pain here because Elon opened the floodgates. Now lots of Bitcoin holders who bought because of Elon will start dumping. Unless you see a counter force to Elon, for example, Michael Saylor, the maniac that he is, sacrificing his entire company for his ego. If he's willing to buy more, but again, this guy is not as influential or has the cult following as Elon Musk does. And bear in mind that the weekly chart is suggesting that the pain has just started for Bitcoin and cryptos in general. Take a look at the MACD indicator, losing momentum for the first time since last year. This is a significant development. Furthermore, we have the negative divergence in the RSI. What else do you need to know? Bye-bye. Time to take profits. Are you going to take profits? Of course not. Because the moon, bro. The future, bro. What about the other tulip? Dogecoin. Dogecoin was distant for a nasty flush down. And here come the con man rescue number 2, pushing the name higher. to face the resistance to the penny. And now that the faith regarding Reverend Elon, the con man of the century, is being shaken, even the Dogecoiners will start to question the merit of their investment. If that accelerates, you will start to see the sell-off in Doge resuming. And remember, it's a handful of people who own and control the majority of Dogecoin. Billions and billions of dollars. They're willing to play the game so long as Reverend Elon continues to pump higher. But if the fraud starts to appear to the surface and the sentiment is shaken, those quote-unquote whales will start dumping aggressively once again. And you've already got a taste, a little tiny taste, of what happens when Dogecoin whales start dumping right after the SNL appearance. Dogecoin lost about $25 billion from its market cap right away. So the drop in this, the crash, could be of historic proportions. Here's another tulip, Ethereum. ETH, although I read about it and it seems to be a neater product than Bitcoin. A more promising product, shall we say. But anyhow, here's the trend, this massive rise of Ethereum, about 40% higher. The chart already broke in the trend, attempted to recapture the trend only to fail. This is an ominous negative signal. Very bearish here. You can also easily see a head and shoulder formation, but once again, we are breaking the trend in this chart. This is a negative development, and that will open the floodgates for more pain for Ethereum. Here's another look for the daily chart. Once again, losing momentum in the MACD indicator. We have this reverse hammer closing. We're starting to break the Fibonacci retracement levels. We could see the name going back all the way to 2,500. That will be the correction. Whether the dip buyers will be there to buy or not, that remains to be seen. It all depends on the sentiment among the cryptomaniacs. Now, let's segue to the regular market, the regular human beings market, not the Pokemon market. Here's the SPY, the S&P 500 30 minutes chart. We're facing the very important and very critical support/resistance, now again support level of 412. You saw the gap higher on Friday, much lower volume, lots of short covering, lots of dip buying, and the SPY closed right at the resistance level of 417.30. You think the maverick of Wall Street picks these numbers randomly? Think again. What happens now? You see the gap? That's where your eyes should be drawn to right away. If the chart reverses before closing the gap, then the negativity and the correction resumes in the SPY. And what is the destination? 412. That should be support. If we break 412 once again, that will open the floodgates. So the bullish scenario is, the ideal scenario, shall we say, for the bulls is not to gap higher overnight, but to open flat or slightly lower, and then you see organic buying during the trading hours, pushing the chart to close above 417.30 and closing the gap. That will be extremely bullish. The bears are hoping for a reversal before closing the gap and breaking the 412 support level. That will embolden the bears and will trigger a shorting signal. What about the daily chart? Here it is. What correction? What's going on here? Dropping for 3 days, only to rebound right away, regaining the majority of losses. The SPY remains extremely strong because it includes the inflationary names. It includes financials, industrials, energy. So even if we see pain in the Nasdaq, so long as these sectors of the market continue to outperform, the SPY will hold better. But if the correction in commodities intensify, taking down energy, materials, industrials down with them, then you will start to see the SPY cracking, assuming that the weakness in technology continues to go on. We still have a negative divergence in the RSI. We're not out of the woods yet in this chart. Perhaps a stronger rebound off 3,960 will be more preferable, but the SPY went all the way down to close the gap that you see in the tiny yellow circle right there and then rebounding higher. But it would have been better if the chart went all the way down to a stronger support level of 3,960 and then rebounding higher. What's going on with the cash index, the SPX weekly chart? I continue to call this a bull trap, because this is a rising wedge that should play to the downside. When do I take the bull trap narrative off the table? If we see another leg higher for the SPX in the next few weeks, one massive pop higher, and that will negate any negativity for the SPY. But remember, it is almost vertical. If you look at the monthly chart, the SPY, the SPX, it doesn't matter which one you look at. They went higher in a vertical move. Remember what happened to commodities. You cannot trade in vertical moves without experiencing a sharp steep correction. Now, other technical analysts can play with the chart, say that the rising wedge is still in play, it's not over yet. This is just being cute. The rising wedge was already broken to the upside, but I'm still calling a trap. You can be cute and play with the chart all you want to fit your narrative and then say, oh, I was right. Doesn't matter to me. What matters is this chart is extremely extended and we will face a sharp, steep correction in the SPY. What about the NASDAQ? What's going on here? 30 minutes chart. The center of gravity remains 323. Some of the gaps already been closed. We have one gap around the level of 335. That could be the destination if the Qs continues to rise higher. But again, the bounce on Friday left another gap open, and it happened under very low volume, meaning that shorts were the ones buying on Friday. That's not enough. You need institutionals and you need retail to start buying the dip along with the shorts to have any hope that this oversold bounce is sustainable. What about the daily chart for the continuous contract of the NASDAQ? The negative divergence in the RSI persists, and we still have a significant loss of momentum in the MACD indicator. The good news for the bulls is that the chart managed to recapture 13,300 as support. The next challenge is 13,599. You can round that up to 13,600. Doesn't matter to me. What matters is closing the week above that level, and we will say the correction is over and buckle up your seatbelts. The NASDAQ is going higher. However, reversing the move on Friday, let's say starting Monday, meaning tomorrow, that would tell us right away that Friday's activities were just short covering and the negativity, the bearishness will resume. I highly doubt that we will see a massive move one way or the other prior to the FOMC meeting. What about the IWM, the Russell 2000? We talked about two scenarios. One of those was the bear flag formation. The other one was the double bottom formation. That happens to play out in the short term, and the chart managed to recapture the 218 level for support. Now remember, on Friday we saw a massive pop for lots of the mania names, the reopening names, and that pop started right after the CDC removed the mask mandate for vaccinated people outdoors. Likewise, it was a big week for AMC, lots of the mania stocks, and that is supporting the IWM higher. The next challenge is 223. Watch out for that level, reaching 223, reversing before that, and that will be a shorting signal right there. What about the daily chart for the RUD, the Russell 2000? The number is 2,264. That remains the consolidation epicenter. Closing the week below that level, the bears have the advantage. Closing the week above that level, the bulls have the advantage. It's an intense battle, thrilling to watch, but we have a line in the sand to take trading actions. And the line in the sand is 2,100. Closing the week below that level, and the bears will have the advantage, and you will see the collapse, the massive move to the downside in the Russell 2000. Because all of this consolidation, going all the way back to the beginning of the year, this consolidation is a gathering of energy, and that energy will be released one way or the other. What about the Dixie, the dollar index? I've been waiting and waiting and waiting for the pop higher in the dollar index. That's not going to happen right away. It will happen hand in hand with the resumption of the correction in the stock market. Take a look at the MACD indicator. First attempt was a failure, and right away you saw the flush down in the dollar index. Now the chart is trying a second attempt to gather the momentum for the pop higher. Perhaps it will go down all the way to the level of 90 once again. That would be a triple bottom. Rebounding from that level will be the signal that the US dollar will be once and for all able to break above 91, and you will see the release of that momentum that has been building up in the MACD and the RSI indicator. There will be a massive pop higher in the dollar index. Remember, I am a dollar bear in the long term, but in the short term, the dollar got whacked and it is primed for a big short covering rally. What about gold? What's going on here? Still battling the resistance level of 1,850. And again, the mystery is, suppose gold is saying there is a breakout imminent in gold prices going all the way to perhaps 2,000. What will that mean for the dollar index and yields? Is gold saying, hey, yields are about to go down and there is more pain in the US dollar? Once again, the inverse relationship between gold and treasury yields will be watched closely, at least by me. I want to see when will that breakage of the the inverse relationship between gold and yields finally ends. Will gold once again proves itself as an excellent hedge against inflation, the most reliable hedge against inflation? This is the challenge for gold and silver, by the way, in the next few weeks. And here is the gold to copper ratio, and they use it as a pulse for fear versus complacency. I don't agree with this 100%, but it is here. Lots of traders believe in the gold to copper ratio, and if it is true, then we have reached the most intense and extreme level of complacency in the stock market that we have seen for at least 30 years. And here it is. What about yields? We had the bull flag formation failing to break out and instead pulling back all the way to the support of 1.62 basis point. The challenge right now for yields is the following. Can yields rebound from the support, or will it break the support to the downside? Because rebounding from the support will form an ABC formation, which should take yields higher. Breaking below 1.62, that will be an ominous signal, and it will be triggered by a certain event. What would that be? We know the auctions took place this week, the 10-year and the 30 years auctions. They were okay, nothing impressive at all. They were just okay, and that was good enough to reverse yields lower. In addition, we got the retail sales data, and that was flat month over month, and that was also enough to tamper some inflation expectations. What about bond prices? What's going on here? The TLT weekly chart and the line in the sand remains 134.5. Breaking this level will open the floodgates, and you will see bonds crashing once again and yields popping higher significantly, perhaps all the way to 2%. Now, take a look at the MACD indicator, a significant loss of momentum that goes all the way back for almost a year, meaning that in the event we see a short squeeze in the TLT, that will be one hell of a rally. Now, before you go ahead and start buying TLT calls, you have to ask the question, what will be the catalyst that would trigger a short covering squeeze in the TLT? This catalyst has to be extremely disinflationary, negating the whole inflation theory. What would that be? I might have a clue. Stick around for the conclusion of this video. What about the VIX? What's going on here? We saw the massive pop higher only to reverse all the way back to base, breaking the support of 20. Of course, the geniuses on CNBC and the likes, but namely Tom Lee from Neptune, already calling the bottom. We're going to see another face ripper rally. The first one didn't happen. Perhaps we will see the face melting rally. And remember, Tom Lee is a fraudster. He's a fortune teller. He's not an analyst. And I exposed this guy in details. I showed you every single call he made. And it is like shooting a dart in the dark. But 2020 was the year of Neptune, and younger traders who just joined the market right away in 2020 during the March bottom think that this guy is the Messiah. Be careful. He's going to get it right for a while. But once he gets it wrong, it will be a big event. Remember Bitcoin 2018. So what do we see here in the VIX? The daily charts look very negative, closing below the very important support level of 20. However, take a look at the MACD and the RSI indicators. The momentum is still here. The momentum is still positive. And most importantly, take a look at the weekly chart of the VIX. The pop hasn't even started in the VIX. Enough said. Moving on to Apple, the big kahuna. What's going on here? Some gaps were closed, but some are yet to be closed, and the chart opened one more gap during the activities on Friday. Assume that the bounce will continue for Apple. The destination will be closing the gap around 130, preferably going all the way to 131, that happens to be a resistance level, and recapturing that level as support. I doubt that will happen for Apple because when we switch to the weekly chart, it doesn't look so good. You have sort of a head and shoulder formation, and you have a failure to break in the MACD indicator. The chart was supposed to break above the average line in blue, creating green impressions in the histogram, signaling a revival of the momentum in Apple. That did not happen, but it is not a death sentence yet. You gotta watch it closely. If we see more down days for Apple, then this failure to cross and create positive momentum will play out to the downside, and we will see a flush down in Apple. And remember, as Apple goes, so will the Nasdaq. What about Tesla, the souffle? What's going on with the souffle? The souffle, I identified the support for you at 540. I would not be buying calls unless we start rebounding from 540. Yes, the chart is technically oversold, but it is not severely oversold. We saw a minor rebound on Friday, but that doesn't mean that the pain is not set to continue, specifically after the move that Elon Musk pulled over the weekend. 540 is the level to watch. Breaking below 540 at any point during the week will take us all the way down to close the gap around the level of 400. And by the way, here is a weekly chart for Tesla. The MACD indicator was supposed to curl back upward, crossing the average, creating green impressions in the histogram. That did not happen. It took a U-turn, and now we're seeing more negative momentum invading the chart. And by the way, here it is. Tesla on top, and try to guess what the other chart is. I'll give you 5 seconds. 5, 4, 3, 2, 1. This is a chart of the dot-com bubble top of the NASDAQ. Eerily similar. But hey, Reverend Elon will save us, and he will take us to heaven. Okay, perhaps a souffle heaven, but nothing more. And here it is, the tickers festival. Lots of charts, oversold charts. But let me demonstrate for you the difference between an oversold bounce and a sustainable bounce. Here is a chart of ARK Invest bouncing from extreme oversold conditions on the daily chart. And ARK Invest managed to rebound from this level in the RSI many times before in the past. So it is a reliable dip buying level. However, switching to the weekly chart, and the picture is extremely negative. There's a lot of pain to come for this chart, regardless of the short-term bounces, unless we see a repair job. On the weekly charts, these dips, these oversold bounces are to be traded, not to be bought. Meaning you buy call options. You don't buy the dip or commit serious capital to play these oversold bounces. Here's another one. AMAT, Applied Materials. This name will report earnings this week, by the way. Heavily oversold on the daily chart and rebounding significantly higher. The problem is the trend has been broken. And when we switch to the longer term charts, the weekly chart, the change in momentum is also just starting, meaning there is a lot more pain to come for this chart in the medium to long term, regardless of the daily oversold bounces you'll see. Here's another one, Alibaba. Starting to become oversold. Perhaps there's more pain to come for the chart before becoming oversold. So we're watching Alibaba, planning to trade an oversold bounce. But remember, the name is facing significant pain. And here's what I said about Alibaba a few months ago. I recommended against buying the dip. And of course, some of the geniuses, the Robinhood idiots and the likes, once Alibaba rebounded higher, they're starting touting me and, look at you. You don't know what you're talking about. What, do you think I was born yesterday? You think I haven't seen this movie before? Right away, few months later, Alibaba reversing lower. And if you wanted to play the cloud momentum, the cloud growth, I also suggested playing Microsoft instead of Alibaba. You have a similar rate of growth, if not higher, with a lot less risk. Microsoft is a better play than Alibaba. At least it was at the time I issued this tweet. Here's another oversold name, CMG, Chipotle, severely oversold, catching a triple bottom. Lots of support at these levels. But once again, if you switch to the weekly chart, and I'm not going to do everything for you, you will see that this bounce, at least for now, is not sustainable in the long term. Trade the bounce, don't buy it. Here's another one, DraftKings, catching support from extreme oversold conditions. What is the target, at least for me? 48.5. That would be my exit. If it goes higher, who cares? I got it at 40. I get out at 48.5. In, out, hello, goodbye. The valuation is starting to become a little more reasonable, but if the market turns against these names, the momentum names, there will be more pain for DraftKings. Here's another one, Fuel Cell, a mania name, down about 80% from the highs. Now think about this. During the mania last year, I've been saying nothing goes in a straight line. All of this mania is going to come to an end. Likewise, nothing goes down in a straight line. You got to have big rebounds, big bounces. The daily chart for Fuel Cell is extremely oversold. The weekly chart, not so much, meaning, once again, the chart could rebound on a daily basis, but the weekly picture, the long-term picture, remains negative. Here's another name, not an oversold name, but a name I talked about on Twitter. I announced that I bought shares of Hawaiian Airlines, so let's talk about it. We have a descending line that was already broken, and we have a bull flag consolidation in this name. It is a recovery name, it is a reopening name, and of course it has the competition from Southwest. But unlike Southwest, this name has not recovered yet, so the opportunity is not in Southwest. If you wanted to play Southwest, you should have done that last year when I showed you the rotation trade. Now it's too late for Southwest, but perhaps there is an opportunity for Hawaiian Airlines. And this is, by the way, not a long-term play. This is a flip, just like Elon Musk flipped Bitcoin. Here's another oversold chart, Intel rebounding higher. And you are seeing the MACD indicator, the momentum indicator, along with the RSI trying to curl upward, trying to gather that momentum. So the oversold bounce could last a little longer. But once again, for a name like Intel, I will be trading the bounce, not buying it. Because remember, three conditions I'm looking for to evaluate buying the dip: the technicals, the fundamentals, and the valuations. The fundamentals are not supportive for Intel. AMD, Nvidia eating their lunch, and we still don't have a solid plan in reviving this company. Another one, ServiceNow. This is a weekly chart. If you look at the daily chart, it is oversold. When you contrast that with the weekly chart, what do we see? We see a reversal in the trend. It was a positive trend going all the way back to last year, and now we're seeing lower highs and lower lows. Ladies and gentlemen, the trend has reversed for the high multiple, high valuation names, chiefly in the software sector of the market. And here it is. What about Palantir? Weekly picture, the head and shoulder formation persists, and perhaps we will see more pain for Palantir. Yet the daily chart, severe oversold conditions, a massive bounce on Friday, and the test remains. Can the chart gather momentum in the MACD indicator, creating green impressions in the histogram, and this time around, once and for all, breaking above the descending line? I'll believe it when I see it. Another one, Plug Power. Down over 75% from the highs. Unbelievable decline for this name. We have a descending line that appears to be broken to the upside, meaning we could see lots of short covering and a nice oversold rally for this name. But remember, and by the way, they keep telling us that this is the most educated generation of investors, blah, blah, blah. If they are, they could have made a simple Google search and realized that Plug Power was one of the mania names during the dot-com bubble, and it went down crashing in one of the top 10 nastiest crashes in the dot-com bubble era. So once again, the smartest generation of investors, my ass. Here's another name that I bought lots of calls for, CGen or SGen, the ticker. Not only that the weekly chart is oversold and it is curling upward, starting to gather that positive momentum to blast higher, but the level of 137 has been proven over and over again as an excellent support. The chart went back and forth, and it continues to rebound from this level. If you switch to the daily chart, you will see that the chart is also positive from a daily perspective. So this is one name I'm betting heavily on that we will see a pop in the next few weeks for CGen. What about Snowflake? Another one, down over 57% from the highs. Severe oversold conditions, and we are seeing an oversold bounce, an oversold rally. The sustainability of this rally is a different story. Another one for T-Doc. You wanted tickers? Here are tickers. And it's going to be the last one, by the way. This is an ARK Invest name, down big, about 58% from the highs. It is severely oversold, and it is primed for a bounce, at least in the short term. Moving on to the conclusion of this video. What do we have on the economic calendar this week? On Monday, we have the Empire State Manufacturing Index. This will be critically important. And again, cooking or no cooking, if the number comes a little cooler than expected, then you will see that short squeeze in the TLT playing out, and you will see yields diving lower. And of course, the disinflationary crowd, the inflation deniers, will have orgasms all over the place until the next piece of data that shows that inflation is actually rising higher. Anyhow, Tuesday, we have an important indicator for the housing market. Housing starts. Is the supply catching up with the demand or not? Wednesday, the most important day of the week by far, the FOMC minutes. Papa Jerome, what is he going to say? Still not thinking about? Or is somebody going to smack his head and tell him start thinking now? Time to grow up. You're 70 years old. Enough is enough. Thursday, per usual, we have the initial jobless claims for the week. We have the Philly Fed Manufacturing Index. And again, the cooking will be evident if the Empire States Manufacturing Index says one thing, and then we have the Philly Manufacturing Index says the opposite. Friday, we have the Manufacturing PMI and the Services PMI. Those will also be important readings regarding inflation. Lastly, what about the earnings calendar? Monday, we have Riot Blockchain. Why is this important? It's a small name. It is hardly important for the broader picture in the stock market, but we are seeing weakness over the weekend for cryptos. The name happens to be extremely oversold from a technical basis. Will that be enough for an oversold rally, or will the weakness in cryptos in general impact the name negatively? Once again, the battle between technicals and fundamentals. Tuesday, we have lots of retail names this week, starting with Walmart, Home Depot, and Macy's on Tuesday, in addition to Take-Two Interactive. Wednesday, we have Lowe's, Target, TGX, TJ Maxx, whatever your preferences are, and Cisco. Thursday, we have Kohl's or Mel. We talked about this name during the futures market coverage. Ralph Lauren and AMAT. Friday, an important name, John Deere. Have we reached the top? Is the commodities mania over? This will be an important pulse for the health of the rally in commodities, but specifically grains. Anyhow, I don't intend to make this video longer, but I did deliver charts and most importantly, tickers. You wanted tickers? I gave you tickers. Good night. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.